Hello.
Hello.
Hi. Hello.
Yes, hello.
Yes, I'm sorry for that. I don't know what's happening here. All right, let's just get started quickly. Okay, I think it's sorted for now. All right, we're gonna go to production cost statement. First of all, let's see if you do know what this statement is all about. What is it all about? What are we gonna have under production cost statement?
Do we have work in progress?
Yes, we do.
Fail?
Yes, we do.
Okay,
What are we gonna
so
start? But what do we normally start with?
sales.
No.
Income statement something as per.
Production cost statement. In the production cost
At the
statement,
beginning.
no,
Oh.
you forgot. Okay, I'll help.
Yeah, I forgot.
It starts with direct material cost.
Oh.
And after direct material cost, what are we gonna have?
Direct labor.
We're gonna have direct labor. Please know that these ones comes from the previous notes, all right? So we're gonna have direct labor.
Which both of them equal your prime cost.
Exactly. And obviously when you add these up, they will give you your prime cost. And normally your prime cost, you will write it up there. What does prime cost stand for?
Isn't it the cost of your direct materials plus your labor?
It is
labor.
exactly.
Material.
And it's an abbreviation for primary cost, right? It is just an abbreviation for primary cost. And the next thing is what?
We have your factory overheads.
Factory overheads. What's next?
Isn't factory overheads minus
Minus what?
Isn't it a negative value?
No, it's not.
Oh.
Factory overheads, you add them up. So when you add that prime cost and factory overheads, you will get cost of production, all right? Cost of production. However, to cost of production, you need to add something. What are we gonna add after this?
Your work in progress at the beginning.
Exactly. You will simply add work in progress at beginning of financial year. And obviously when you work it out, let me just do it quickly. That's what you're gonna have. And what do we subtract?
Your work in progress at the end.
Okay, I don't know what happened here. All right, okay. So I have work in progress at beginning of year. And then I'll get triple X. Oh yes, and you said we will have what? Work in progress at end of year. What do we do with work in progress at the end of the year?
It's a negative value.
It is a negative value, so we have to subtract it. So I'll just put it in brackets. After work in progress at the end of the year, what's next?
is our production cost basically?
It is simply production cost. Now, they're very smart about this. Sometimes they don't give you production cost. And if they don't give you production cost, what are you going to do?
We don't you the values that they gave us, wouldn't we work that out?
You will have to work it out. But sometimes, what if they don't give you work in progress at the end of the year and they also don't give you production cost? What would you do in that scenario?
We will figure out the work in progress at the end first.
How do you figure it out? I'll tell you. You actually go to cost of sales, which is simply another node. Please tell me, what do we have in this node?
Does it involve sales?
Nope. It's simply balance at beginning of year of finished products. So basically you look at finished goods and you will simply put in balance of finished goods at the beginning of the year. Now, after balance of finished goods at the beginning of the year, what do you think will be next?
Purchases or something like that?
Nope.
Yeah, I don't know.
I realize. So it'll be production cost. And this production cost, where does it come from? It comes from your production cost statement. Did you get that?
Yes.
And after your production cost, that's when you're going to have balance at the end of the year. So you'll have balance at the end of the year, but it is of finished goods. And we're going to be doing a lot of this later. So you'll have balance at the end of the year of finished goods, and you will simply write there 000. Once you have this, please note that balance of finished goods at the end of the year, it is a negative balance. You will therefore put it in brackets. Are we together?
Yes.
All right. So this value here, you will simply put it in brackets. And the last part is you calculating cost of sales.
Okay.
And the last part here will be cost of sales. Now, here is what these guys normally do in most cases, and I'll just show you now. So here we have cost of sales, it'll just be triple X. Sometimes they don't give you, check this out. Sometimes they do not give you this value here. They don't give you this value here. They don't give you that value over there. And without this value, you cannot get production cost. Do you understand that part?
Which value?
This one here, work in process. This work in process at the end of the year, they do not give it to you. And they also don't give you cost of production.
Yes.
Now, if they don't give you those two, you will need to calculate cost of production. And let's say this is the cost of production value here. For you to be able to find that value, they will sometimes give you only sales. Now, if they give you sales and markup, you will simply take that sales figure, multiply by 100, divide it by 100 plus your markup, and then you will get what when you do that?
You get your cost of sales.
After getting your cost of sales, then you can simply work backwards. So when you work backwards, you will simply add this and minus that, and it'll give you this value here, which is your cost of production. Once you get this cost of production value, that is the amount that you will simply put in there. And once you put it in there, it'll make it easy for you to calculate work in process at the end of the year by simply taking this same value here. You're gonna subtract that, and subtract that. It'll give you this value over here, which is just work in process. So that's how smart you end up being with production. And you just need to be careful of what you're giving all the time. We're going to be doing a lot of examples today, as a matter of fact. Let's just get to it quickly, which is 13.2. They gave you that really bike manufacturers produces racing bikes that they sell to various retailers at a markup of 50%. I will highlight that because it's very important. For now, we know that the markup will be 50%. And they also tell you that the financial statement, the financial year end is the 28th of February each year. And they said, using the information given below, prepare the following for the financial year end 28th February 20.8. You are given the following opening balances. The first balance is your 80,000 rand. What are you going to do with that 80,000 rand?
That will be our beginning of the year for the direct materials.
So you're going to go to your direct material node, and in your direct material node, you will put that amount as balance at the beginning of the financial year. And this is the value. Are we fine with that 80,000?
Yes.
All right. And let me go back. What do we do with this one here?
Oh, that's gonna be our work in progress at the end, at the beginning. For
At the beginning of the year, but it goes to it. It goes to your production cost statement, right? Thank you. Awesome. Let us continue to the next slide. What do I do with number one?
You will add it in your net purchases that goes to your direct materials.
Awesome. What about number two?
You also add it in your net purchases and your direct materials.
And number three? Perfect.
The third one, you also add it in your carriage on purchases.
Carriage on purchases under my direct material node, right?
Yes.
Hence, you're going to go to your direct material node, and your direct material node under purchases, you're going to add 200,000 plus 60,000 rand. 200,000 plus 60,000 rand will simply give you 260,000 rand, and that will be your purchases, your net purchases. And then you will add carriage inwards, and your carriage inwards will be 30,000. Going back there, we have done number one and number two. Number three, what are we going to do with it? I mean, number four, sorry.
Doesn't it go to our factory overheads?
It goes to factory overheads. Where are you going to add it in factory overheads?
We add it as indirect materials.
Indirect material. So it'll go under indirect material in factory overheads. That is why here under factory overheads, I'll have that 24,000. I just need to check something first. Balance at the end of the year. Do I have balance at the end of the year for consumable stores? What do I do with this?
Yes, we do have that balance at the end.
What do I?
Won't we have to minus it
You will have to minus it from your.
from your consumable stores bought?
Exactly, you have to minus it from your consumable stores. That's why for consumable stores, we'll have 24,000 minus 6,000, which will give us 18,000. Going back to the same slide. Now we're here again. And then number 5. In number 5, they said to you, salaries and wages paid amounted to 210,000 rand. 100,000 of this was for direct labor. Where will this 100,000 go to?
This 100,000 will go to the direct labor cost.
Which is note number 2. In note number 2, you will simply have that 100,000, which is direct labor cost. You will also add contributions by the employer. Unfortunately, we don't have any contributions by the employer here, so our direct labor will simply be 100,000. And they gave you something else there. 60,000 was for indirect labor. Where does that go to?
It goes to factory overheads as indirect labor cost.
It goes to factory overheads as indirect labor cost. You're going to go to your factory overheads. In factory overheads, that will be your indirect labor, and that value will be 60,000 rand. And the balancing figure, how much do we get as the balance figure here?
So we get 50,000.
Where does it go to?
It goes to our sales and admin.
No, not sales, but it only goes to admin.
Let's say selling and
Yes.
admin.
It doesn't go to selling and distribution. It only goes to administration costs because it is specified that it is for admin only. Please note that administration costs and selling and distributions are totally separate. We good? Hence,
Yes.
I'm going to go to my admin cost, and in my admin cost, I will have that value, which is 50,000 rand. Moving right along, we have done number 5. Let's go to number 6. What are we going to do here?
Number 6 is the 16,000 goes to our factory overheads as depreciation, and then our 3,000 goes to our selling and distribution.
Nope.
Wait, no, wait. No. So the 16,000 goes to
Right, the
factory
16,000 goes to
overheads.
factory overheads. You're right about that. The only thing that you got wrong is the 3,000.
The 3,000 goes to admin.
It goes to admin, and the 7,000 will go to selling and distribution. We good. Hence, under factory overheads, we will have depreciation of 16,000, and under administration, we will have depreciation of 3,000, and under selling and distribution, we will have depreciation of 7,000. We still good?
Yes.
Let's just finish this one quickly. And in 7, what do we do? Hello?
Yes.
What do we do in number 7?
So so basically Can I just tell you the answer though?
For what? Is it
For
for
the what goes? Like I know the three, the one that they gave us the ratio. The three goes to the factory overheads,
So how much do
and
you determine how much rent goes to factory?
it is 120,000.
How did you get it?
I said 200,000 times
Uh-huh.
3 divided by 5.
Times 3 divided by 5. How did you get that 5?
Oh, I basically I'm trying to find the 3, the ratio for the third,
Yeah, but
the
how did you
third.
get the 5? How did you get the 5?
Oh, because I said 3 plus 1 plus 1.
3
That
plus
equals
1
5.
plus 1. And 3 plus 1 plus 1 will simply give you that 5, right?
Yes.
And how much did you get? You said you got how much?
I got 120,000.
You got 120,000. Where will that 120,000 go to?
Factory overheads.
Factory overheads. And what else do we have?
We have our office and
Do you agree that office will be admin?
yes,
And how do we calculate what goes to admin?
we say 200,000 times 1 over 5.
200,000 times 1 over 5. How much do we get?
We get 40,000.
We will get 40,000. We're still good.
Yes.
Now, that is why when you go to factory overheads, under factory overheads, you will have factory rent, which is 120,000, and under admin, you will have rent for office, which is 1 over 5, and that will give you that 40,000. Under selling and distribution, you will have rent, and rent will be 200,000 multiplied by, I don't know what happened there, it'll be 200,000 multiplied by 1 over 5, which is 40,000 as well. Awesome. Let's move to the next one quickly. I actually want us to finish this quickly. What are we going to do in number 8?
Oh, number 8. This information will be called electricity. So 120,000 goes to factory overheads and 8,000 goes to admin, and that other amount goes to selling and distribution.
And the other amount goes to selling and distribution, and that will be 8,000. Perfect. Next one. We're not done with number 8. What happens there?
There was a sundry expense.
Mm-hmm.
So it was say for the factory overheads, it
Mm-hmm.
was say 25,000 times 80.
You said how much for factory overheads it'll be?
It will be
25,000 times
it's a
80%.
yes,
And it'll give you 20,000.
yes.
And then what happens next? The same 25,000 will go to selling and distribution, and you will simply multiply it by 15%. And the remainder, how much is the remainder? Here it's 80% for factory overheads. For selling and distribution is 25%. How much? I mean, it's 15%. How much is the remainder?
5%.
Where does it go to?
It goes to admin.
It goes to admin, and this will be your admin cost, which is 1,250. That is awesome. So far, so good. And let's get to this one here. We've got commission. What do I do with this over here?
Oh, it goes to selling and distribution.
It goes straight to selling and distribution, and I'll just put it there as commission on sales. It's 84,000 Rand. And what do we do with number 10?
Number 10 is going to be our raw materials issued.
So it goes to note number 1, but it goes to note number 1 as raw materials issued. And you will also note that we were not given balance at the end of the year. That's why we only have raw materials issued. Let me just go back to that just to show you what I'm talking about. Note that the balances at the end of the year, which is number 11, for raw materials, they said it's a question mark. So we don't have raw materials at the end of the year. That's why we only have raw materials issued to production. And raw materials issued to production will be that value over there. Question is, how do I get this balance at the end of the year?
I will do reverse operations.
And obviously you will simply take the 730, you minus 330. 730 minus 330 will give us 40,000. We good?
Yes.
You sure?
Yes.
What do I do with these values? I mean, for raw materials, I have 330,000. For direct labor, I have 100,000. For factory overheads, I have 354,000, which is the sum of all of those. What do I do with all those three values? Where do I take them to?
Production cost statement.
You're going to take them to production cost statement, which starts with what?
Starts with our direct material cost.
You will put it as it is, which is 330. What's next?
Then you have your direct labor cost.
Direct labor cost, which is 100,000. You add those two, how much do you have?
We have 430,000.
And that becomes your prime cost. What else do we still need to add?
Factory overheads.
Factory overheads, which is 354,000. And when you add this value with this value, what would you get?
You get 784,000.
That 784,000 will be your total cost of production. So your total cost of production is made up of A plus B, right? And from there, what else do we still need to add?
Work in progress at the beginning.
We'll have work in
and
progress.
Work in progress at the end.
What do we do with work in process at the end?
We minus it.
We minus it, and then it'll give us total cost of production of finished goods. Where will this amount go to?
Doesn't go to our cost of sales.
It goes straight to cost of sales. So under cost of sales, you normally start with balance of finished goods. In this question, it was not given to us. And then you will add manufacturing cost of finished goods, which comes from the production cost statement. It will be 780. And then you minus closing value of your finished goods, and you'll be left with cost of finished goods sold, which is the same name as cost of sales. It will be 780,000. Any questions?
No.
All right. Let's move quickly because we have a couple of questions that we still need to go through. Now, okay, let's get started here. Where does that go to?
That's gonna be our balance at the beginning for our direct material costs.
For direct material cost, it will be balanced at the beginning. I'm not gonna help you here. You're on your own. Proceed. That one, where does it go to?
Goes to our cost of our product cost statement, production cost statement.
So what are you gonna do? Are you gonna add it or are you gonna subtract it?
We're gonna add it.
Thank you. And this one, where does it go?
It goes to our cost of sales
Cost of sales as what?
finished goods at the beginning.
Finished goods at the beginning. Awesome. Continue. This one, where does it go to?
It goes to our factory overheads as indirect materials.
As indirect
Yeah.
materials. Do you add it or do you subtract it?
We added.
You will add it. I'll come back to that 14,000. Let's come here. Where does it go?
Oh, it goes to our net purchases.
Net purchases. Where does it go?
In our direct material cost.
Under what?
Oh, the second one we also added in our direct material cost
Under
under our
purchases.
net.
And this one here?
That's gonna be our carriage on purchases.
Where?
We'll add it in our direct material cost.
Direct material. And this one?
That one, we will have to minus it from our net purchases. That's from our direct material cost.
So this is what you will have. We still good?
Yes.
Okay, moving right along. We have done up to 5. What do we do with 6?
6, 180,000 goes to our direct material cost.
Wait, 5, sorry.
Oh, 5. 5. Okay. So we have to add it in our indirect material cost.
And what are we going to do with this one here?
We minus it.
We're going to minus it from?
Our indirect material cost.
And where will we find indirect material cost?
In our factory overheads.
Factory overheads. So hence now factory overheads will have 14,000. Remember what 14,000 was for?
Yes.
What was it for?
It is for our consumable stores on hand at the beginning.
At the beginning of the year. This 44,000 is the purchases, and the 6,000 will be consumable stores at the end of the year. It'll give you consumable stores that we used to produce a product, which will be 52,000 Rand. Okay, well done. You're great so far. Let's go to number 6.
Oh, okay. 180,000 goes to our direct material cost.
180 goes to direct material cost, yes.
And then 80,000 goes to our admin.
Correct.
And then 100,000 goes to our indirect labor cost.
Indirect labor cost. Perfect. So you will have under direct, it's 100,000. We good?
Yes.
I mean 180. And indirect, we're gonna have 100,000, and the other one goes to admin. And under administration, we will have okay, I don't know why I started with rand. We will have that 80,000 rand. We still good?
Yes.
Okay, perfect. 7.
Seven. So yeah, we have to calculate the depreciation of the factory equipment that will be put in our factory overheads.
That will be put on our factory overheads. The set depreciation rate is 12% per annum on diminution balance method. We're still good.
Yes.
Now, how do we calculate depreciation there?
Oh, so you get that 1 million.
You will take 1 million, which is the cost price, right?
Yes. Minus 240,000.
And you will have accumulated depreciation of for 240,000. So we're gonna minus it. What do we get? And what do we call whatever you get there?
This is going to be our carrying value.
It's our carrying value of how much?
It will equal 760,000.
760,000. And how do we calculate depreciation from that?
We say our carrying value times the rate times by 1.
So it'll be 760,000 times the rate. The rate was 12%. And how much do we get?
91,200.
Where does it go again?
Goes to our factory overheads as depreciation.
So you will simply take it to your factory overheads as depreciation. The reason why you're taking it to factory overheads because this is depreciation on factory equipment, right?
Yes.
Now we're gonna go to our factory overheads, and our factory overheads, we will simply add that depreciation of 91,200. Let's go back to the same question again. We are here. Number 8, what do we do there?
Number 8. So Number 8, the 2,500 will be put in admin as
Yes,
depreciation,
correct.
and the 11,000 will be put in selling distribution as depreciation.
As depreciation. So you're going to go to administration. I'm going to start with selling and distribution. Under selling and distributions, I will have, okay, I'll have depreciation, and my depreciation will be 72,000. And then I will simply go to my admin. Under my admin, I will have depreciation on office equipment, which is 2,500. What's next?
So now we have our rent. So
Yes.
60% of the rent will
Mm-hmm.
go to factory overheads.
So factory, how do we calculate that?
You just say 500,000 times 60%.
500,000 times 60%. How much does it give you?
It will equal 300,000.
300,000. Where does it go again?
Our factory overheads.
It goes to factory overheads. Hence, under factory overheads, under factory overheads, we will have factory rent, and it will be 300,000. Please tell me about the rest. What do we do?
The rest, 15% goes to admin.
And how do you calculate that? It's 500,000, right? Times 15%, and that will go to admin. How much is that?
75,000.
75,000. That 75,000 will go straight to admin. And the admin, I will have that 70,000 rand, which is for electricity. And okay, what do we do next?
The rest of the the rest of the
Actually, that was
percentage
for rent,
basically
sorry. The rest was,
25%.
which is
So
25%. So 500,000 rand times 25% will go to selling and distribution. So when you go to selling and distribution, you will have 72,000 rand. I mean, you will have, it was 500,000 rand. You're going to multiply it by 25%, and that will give you 125,000. Are you fine with it?
yes,
And the last one, which is obviously not the really the last one, we've got electricity. What happens there?
320,000 goes to factory overheads.
This goes to
Admin is going
factory
to be
overheads.
10,000.
This goes to factory overheads, and that, where does it go?
The 10,000 goes to admin.
It goes to admin. How much will go to sales?
14,000 will go to sales.
How did you get that?
We said 344,000 minus 320,000 minus 10,000 equals 14,000.
It goes to, it's 40,000. I'm going to do that quickly. And I will start with my factory. This is what I will have, 320. Then I will go to selling and distribution. Electricity, you said it's 14. And the last one will be administration, and that will be 10,000 rand. We're still good.
Yes.
And we are here. What do I do with that?
Won't that be sales? I mean, selling and distribution.
Selling and distribution, but what do you write it as?
Vehicles.
You will simply write it as sales vehicle running expense, and it will be 72,000.
Okay.
And
Yes.
I just showed you the answer there. Now for commission, how do we calculate commission here?
But then you missed the sundry expense one.
Okay, let's start with that. What are we going to do?
To find the factory overhead sundry expense, we say 90,000 times by 4 over 6.
And where does that go to?
Factory overheads.
Factory overheads, and then what else are we going to have?
Admin.
So admin
is it's gonna be 90,000 times by 1 over 6.
And that will go to admin. And obviously the same value will also go to selling and distribution. So I'm going to go to I'm just going to go to factory overheads, and I will simply write what you said, which is my sundry expenses. My sundry expenses will be 90,000 times 4 over 6, which is 60,000. Selling and distribution will be 1 over 6. That is for sundry expenses. And obviously I wrote it, which is 15,000. The last one will be for administration, sundry expenses. It'll be 1 over 6. Please ignore the percentage. It is just 1 over 6. It is just 1 over 6. And that will give you the value that we have there, which is 15,000.
Okay.
Going back to this. What do we do in 11?
Mm. 5% of the sales amount goes to commission that will be put in the sales and contributions. I mean, sales
and
distributions.
You will go straight to sales and distribution. Under sales and distribution, you will have 5% of that, and that will be 180,000. We're still fine.
Yes.
Now just add depreciation of vehicles. Add these up, you will get 417,000. I'm going to go back to my raw materials. Raw materials, I still have to minus finished goods. And finished goods at the end of the year, the balance was 64,000. In this scenario, it was given to you. Here it is over here. They gave you balances at the end of the year. And for finished goods of raw materials is 64,000. Where do I take that to?
Which one?
The finished goods stock at the end of the year.
It goes to the cost of sales at the, and it will be put as the end of the year of the finished goods.
What are we missing here?
Work in progress at the end.
And work in progress at the end of the year, it normally goes to the production cost statement. Do you agree with me?
Yes.
But now, if it goes to the production cost statement and we don't have it, they must at least give us something, okay? We'll deal with that just now. I'm just going to go to my direct material. As I've showed you, that 64,000 will be minused, and then you will go to your direct labor. Direct labor doesn't change, it's still 180,000 because my contributions are still zero. And the next one will be overheads, factory overheads. Your factory overheads will be 923,200. The last step for us is to prepare your production cost statement. In your production cost statement, you'll have direct material, which is 1,302,000. You add it with direct labor of 180. It'll give you a primary cost or your prime cost, which is 1,482,000. You will add your factory overheads that I just showed you, which is 923,200. You will get your total cost of production. To your total cost of production, you add work in progress at the beginning of the year, which is 80,000. Add the two, it will give you 2,485,200. You minus work in progress at the end of the year, and obviously we didn't have work in progress at the end of the year. However, we are also not given finished goods. Are you aware? They didn't tell us, they didn't give us cost of sales. They didn't tell us how much was finished goods. Are you aware?
Yes, I see.
Now, here's the thing. I'm going to go back to the previous page. Check the previous page as to what they said. They simply said to you, the markup is how much?
50%.
It's 50%. At the same time, in the next page, check what they gave you. In the next page, they gave you a sales figure, and your sales figure is 3,600,000. We're still fine with it.
Yes.
When you go to your production cost statement, look at your production cost statement, you are missing two things. You are missing work in progress at the end of the year. You're also missing cost of production. Do you get it?
Yes.
There's nothing you can do to get work in progress at the end of the year. But this one here, you can simply go to another node. That node is called cost of sales node. In your cost of sales node, you have balance at the beginning of the year. We don't have production because this value here must come from the production cost statement. Do you understand that part?
Yes.
It must come from the production cost statement, which is the previous slide. They didn't give it to us, but they gave us the balancing figure, the finished goods balance at the end of the year, which is 80,000. However, we could be able to calculate cost of sales. How do we calculate cost of sales?
Cost of sales. We just say the sales
Sales of how
minus
much? How much was it?
3,600,000
And then what are you going to do to find cost of sales from that value?
times 100 over 150.
Times 100 over 150. It'll give you that 2,400,000. And what do you do next?
We take that value and we put it as our cost of sales.
And then
We do our reverse operations in order to
the
find
reverse
our finished
operations.
goods.
So we add this, we minus that, right?
Yes.
And that will give us 2,410,000.
Yes.
This 2,410,000, where does it go? We take it straight to the previous slide. Do you agree with me?
Yes.
In our previous slide, that value, we're going to put it as what?
We're going to put it as work in progress at the end.
No. Remember I said this value will go to the next line.
Question.
Excuse me?
Can you please repeat? Oh, never mind. Sorry, it's our production.
Yes, it is our
The
production.
production cost.
And then obviously to work out work in progress at the end of the year, you're just going to subtract that, right?
Yes.
And then it will give you work in progress at the end of the year.
Okay.
Do you have any questions?
No.
Okay, I'm not done yet. We still have a lot to do as a matter of fact. Okay, here's the next one. Alrighty, let's get to this one here. What do we do here? We have centipede manufacturers, swimming pool filters. The financial year end is the 28th of February. Can you see everything?
Yes.
Right? The end of the financial year is the 28th of February 20.8. You need to prepare your production cost statement on the 28th of February 20.8 together with appropriate notes. I'm going to start with this one here. Where does this go to?
It goes to our balance at the beginning of our direct material cost.
Direct material cost, it will be balanced at the beginning of the year. It will be 60,000. And this one, where does it go to?
It goes to our production cost, but it
Is
will be
what?
work in progress at the beginning.
Do we add or do we subtract it?
We add.
We add. What about this? Where does it go to?
It goes to our cost of sales.
And it goes to our cost of sales as what?
Finished goods at the beginning.
Finished goods at the beginning of the year. This is what we have. Perfect. Moving right along. What do we do next? Where does this one go to?
That's when the consumable stores on hand goes to our indirect materials.
Together with this
it's
one,
gonna be a
right?
positive value. That one we added in our indirect materials.
All right. And
It will
okay,
be
just gonna go
positive value.
straight there as cost of finished goods. Immediately when you get to consumable stores, quickly check the closing balance. Now let me quickly check my closing balance here. For my closing balance, I have 6,000. What do I do with that 6,000?
We minus
From what?
from our indirect material cost.
From our indirect material cost. That is why I'll have 15,000 plus 45,000 minus 6,000, and I will get 54,000. We good?
Yes.
Moving right along, let's get to the next one. This one, where does it go?
We added in our net purchases in our direct material costs.
What about this?
This one we added in our carriage on purchases
And,
direct material cost.
and this one here?
That'll be our materials issued.
Materials issued right at the end, right?
Yes.
Okay, I'm just going to quickly browse through this quickly to check if I have any transactions regarding materials. Oh, here I do have one here, number 5. They say a consignment of raw materials which was imported from England was delivered on the 28th of February 20.8. However, no entry has been made. The costs were as follows. Cost of raw materials was £5,000. Carriage on raw materials was £800. And they also gave us import duties. And they said import duties is 10% of raw material cost. The exchange rate on the day was £1 is equals to 12 Rand 40. How do we calculate the amount of raw material, the cost price of raw materials?
We say 12,4 times 5,000 pounds.
5,000 times 12,40. How much do we get?
We get 62,000.
We get 62,000. Where does this 62,000 go to?
Doesn't it go to our cost, our materials at the end?
No,
Then it's net purchases, isn't it?
it's net purchases. It's net purchases because we are simply purchasing it. So that will be under purchases. So it'll be under net purchases. And the next one, what are we going to do with the 800 pounds?
You say 800 pounds
800 pounds.
times 12,4.
How much do you get?
It's 9,920.
What is that for?
That is our custom duties.
No,
Oh no, carriage on purchases.
carriage on purchases. So I'm going to add this to my carriage on purchases. On that note of custom duties, how are we going to calculate custom duties?
10% of the amount we just calculated.
Which amount?
Of the raw materials amount.
Which is?
62,000.
62,000. You're going to times it by 10%. What is 10% of 62,000?
6,200.
6,200. And you said this is what? It goes under custom duties. It also goes to direct material cost, right? Yes, no? Hello?
I said yes. I said yes.
Okay. Now let's go straight to our direct material. And that direct material, we will have net purchases will be 210,000 plus 62,000. We spoke about that. You're going to have carriage on purchases, which is 19,500. We're going to add 9,920, that which is calculated. It'll give us our carriage on purchases, which is 29,420. We're going to add our import duties, we just calculated, which is 6,200. And then we're going to have that amount. But we still need to minus the value of the closing stock. When you look at the balances that are given, you will realize that with respect to raw materials, we have a question mark. That is because we don't have the closing value of our direct material. You need to check if there were any direct materials that were issued to production. And you did say that we do have direct materials that were issued to production. That will go straight to our direct material cost, and it will go as our balance, and our balance will be that value, which is 246,000. For us to determine the value that is missing, which is the value of our closing balance of raw materials, we will take 246,000, we minus 367,620. It will give us the value of raw materials at the end of the year, and that will be 121,620. Do you have any questions thus far?
No.
All right. Since we're done with raw materials, I am going to start here. We have wages of 198,000. Where does that go to?
That goes to our direct labor cost.
It goes to our direct labor cost. Right? And obviously it goes to our direct labor cost. I'm just going to check, always browse. Obviously you'll have the reading time and you'll have time to check what's next. And I will simply go to the next note. And the only thing that talks about wages journal, yeah, it says the wages journal for March has not been posted. Note that March is the next financial year, okay? Well, I don't know, they didn't specify which March here. And then they said gross wages of factory workers is 19,800. The employer's medical aid contribution for factory workers is 3,600 payable to ABC Medical Fund. This question seems to have a mistake. Firstly, they just said March and they did not mention which March we are talking about, okay? Now, since they said March, I'm going to assume that it will be March
2017.
20.7. We good?
Yes.
So basically 20.7 will be the beginning of the financial year. Do you agree with me?
Yes.
Now, what are we going to do with this amount here?
Don't we add it?
We were not supposed to add it, but we will have to add it in this scenario because that salary was for March and March falls in the current financial year. Then we're going to have to also add this 3,600 as medical aid contribution. Are we together?
Yes.
All right. Now that will go to our direct labor.
Okay.
Under direct labor, we will simply have 198,000 plus 19,800, which will give us 217,800. Medical aid contribution will be 39,000. Where does the 39,000 come from? I know you didn't see that, but the 39,000 comes from the fact that medical aid that was already recorded, it was 39,000. Can you see that?
Not yet, because I think it's still loading.
Can you see it?
Yes, I see it.
We good?
Yes.
Okay. So that 39,000 will be added with this 3,600. We're going to add 39,000 with the 3,600 because that is for medical aid. And all of that will go to our direct labor. Are we still good? And when you add them together, it will give you 42,600. We don't have any contributions by the employer. So our net balance will be 260,400. Any questions?
No.
Hello? We good?
Yes. But
All
you
right.
see, for this unemployment insurance fund
Yes.
contribution, how would they ask a question like that?
They will simply say that the employer contributes only 1% of your basic salary.
Oh.
Now, let's say basic salary is 60,000 Rand per month. What is 1% of 60,000? It's 600. Do you agree?
Yes.
Now, if that is the case, please note that they need to tell you. If they tell you that ignore the maximum amount, now ignore the limit, you will simply take it as 600 as it is. Do you understand that?
Yes.
However, if they don't say anything, you cannot say that UIF per month may not exceed this value.
Okay.
Please write this note somewhere. UIF per month may not exceed 148,072. So if you want this per annum, you will have to multiply it by 12, meaning that per annum, UIF may not exceed 1,784,784,64. That is per annum. UIF may not exceed that value per annum. So make sure that UIF is always limited, meaning that you always take the maximum value. So let's say your UIF is around 2,000 Rand. You will only record 1,784,64 unless the question tells you that you must ignore the limit. We good?
How about if your answer, your UIF is below the this amount, the 1,000
Exactly.
something?
Let's say UIF is it's 1% of 6,000 Rand. What is 1% of 6,000 Rand?
600? No, it's not 600. Isn't it 60?
It
Yeah,
is.
60.
You said it is 60. So this will be 60. And 60 is way below that 148,72. So I'm just going to take this 60 and multiply it by 12. 60 multiplied by 12 will give you 720. So I'm just going to record it as 720 as it is.
Oh, okay.
So if it's less than 148, you record it as it is. But if it's greater than 148,72, you limit to 148,72.
Okay.
We still good? All right.
Yes.
Let us move to the next one. Okay, we have done that. Okay, let me just move to this. All right, we have done number 2 automatically. What do we do with number 3?
We added in our factory overheads, and the information is going to be electricity.
It will be electricity, right?
Yes.
Can I check quickly in the previous slide whether we have electricity? We do have electricity. How much is that? Do you see it?
Yes, electricity paid.
So what am I going to do?
Once we add those two values together,
And how much do we get?
we get 12,000.
12,000. Thank you. Perfect. Can I start here? Because I need us to take everything here. Where will this one go to?
Which one?
The last one,
With
maintenance.
the maintenance. Isn't that usually to calculate depreciation?
Nope. Maintenance and depreciation are
Oh
different.
no, it goes to our factory overheads.
As maintenance. But before taking it to factory overheads, I'm going to come to this side. Is there anywhere where they talk about maintenance? There's nowhere where they talk about maintenance. So I'm going to take that straight to my factory overheads. And in my factory overheads, I'll just have maintenance of factory equipment. And okay, I don't know what happened there, why I started with depreciation, why I started with rent. I'm just going to have maintenance of 24,000 rent. We still good?
Yes.
All right. Let's move to the same slide again. I'm done with the first one. This 72,000, where will it go?
It's only our factory overheads rent.
And they said here rent was 6,000 per month at the beginning of the year, but it was increased by 10% on the 1st of January. The bookkeeper has forgotten to process the increase for January and February. So what are we going to do here?
Don't we?
So the beginning of the year will be 1 March, right?
Yes.
And the end of the year, this will be 20.7, and the end of the year will be 28th of Feb, 20.8. And they told you that rent for when? Rent for
The 1st of January.
the
That
1st
they
of
have
January.
forgotten about it.
So that rent was not recorded. So I will just put it here. We're gonna have Feb, we're gonna have January. I'll have 1 Jan, and that will be 20.8. That rent was not received, but they told you that rent was 6,000 per month, but only the increase was not recorded. Did you note that?
Yes.
Only what?
The increase.
Has forgotten. The bookkeeper only forgot to record the increase. Those 6,000 rent was recorded every month, but the increase was not recorded. How much will the increase be? Hello?
Yes, I'm calculating the increase.
Okay.
The increase will be just the 10% increase will be
Yes,
600.
it'll be 600, which is 6,000, right? You multiplied it by 10%, am I right?
Yes.
And when you multiply it by 10%, how much do you get?
We get 600.
600, but this 600 was for how many months?
For 2 months.
So I'm gonna multiply it by 2. How much do we get?
1,200.
What do I do with this 1,200?
Don't we add it in this 6,000?
We add it not to the 6,000, but we're gonna add it to the 72,000. Does it make sense?
Oh, yeah.
Do you understand
Yes.
why? The 6,000 has already been recorded, so you don't need to record it again. Do you get it?
Yes.
So that's why we're just gonna record it. We're just gonna add it with that 72,000 and that's it.
Okay.
Can I move on?
Yes, you can.
So I will simply go to my factory overheads. In my factory overheads, I will have rent, and to my rent, I will take the 72,000 and add 1,200. Now factory overheads, there it is, 72,000 plus 1,200. It will give you 73,200. Are we fine so far?
Yes.
Alrighty, let's move right along. We're gonna come to this here. Sorry, I just want to finish this before I let you go. That is done. Number 4 is also done. We are left with number 6. What do I do there?
Number 6, isn't this like our actual amounts for our admin costs and our selling
Exactly.
distribution?
So you're gonna take all they said total administration cost for the year is that, and while the total selling and distribution is 125, 120, you take those two amounts to your admin as well as selling and distribution. Okay. Unfortunately, in this scenario, they didn't ask for those notes. Okay. Going right back to that, I'm just going to go to my production cost statement. Before going to my production cost statement, let me start with my direct labor. Direct material. This 124, 246, you know where it needs to go to, right?
Yes.
Where does it go?
It goes to our production cost statement.
It goes to our production cost statement. So in my production cost statement, I will have my direct material of 246, and I'll also have my direct labor. Add those two, that will give you prime cost. To the prime cost, I have to add factory overheads, and the factory overhead cost is simply this cost here, which is 208,200. That goes straight to my production cost statement. And in my production cost statement, I will add that. When you add that with prime cost, it'll give you my total cost of production, and that will be 714,600. You add work in progress at the beginning of the year, and then you have to minus work in progress at the end of the year. Let's check if we were given work in progress at the end of the year. Was it given to us?
Don't we have to calculate it?
Check that.
Yeah.
In this case, it was given to us, so we were lucky.
1,000.
So we were lucky. All you have to do is just go to your production cost statement and subtract that value. It will give you cost of finished goods, which is 793,600. Okay, that amount, where does it go to?
That one goes to our cost of sales.
It goes straight to our cost of sales. So I'm going to take it straight to our cost of sales. Okay, I don't know why I did that. That is not cool at all. So I will just write it like this. I think it's better this way. Why is it doing this? Okay, let me just do it again. All right, the better one will be this. Okay, so it goes to the next slide. In the next slide, we have cost of sales. In my cost of sales, I will simply have, what do I start with, by the way, in cost of sales?
We start with our finished goods at the beginning.
And then you put this value that you got from the previous slide. Do you see it?
Yes.
So the value that we took from our previous slide, there it is over there. Are we still good?
Yes.
And then what do we do? What do we do after that?
We have our finished goods at the end.
Finished goods at the end, which was it given to us? Let me go back and check again. Finished goods at the end of the financial year. Oh, there it is. It is 51,800. Finished goods at the end of the financial year is 51,800. Finished goods at the end of the financial year. This is incorrect. Do you realize that?
Oh, is it because we have the sold and bought products at the
Yes.
end, like the sum?
They gave it to us. That value of finished goods, it is given to us. So I don't know where that 1 million comes from, but it is given to us. If I go back to that information, check. They gave us balance of finished goods at the end of the year. And how much is balance of finished goods at the end of the year? Remember, the end of the year is the 28th of February, 2028. How much is it?
It was 51,800.
That is the amount that I needed to subtract. The 1 million rand, I don't know where that comes from. That is why in this
But
scenario,
what was,
excuse me,
but this total units produced and total units sold though?
that one, never mind it for now. They probably will ask you questions on that later on, okay?
Okay.
Now, here you will have cost of finished goods, and your cost of finished goods will be 1,049,840. Let's check if that is correct. 308 and 40 plus 793,600 minus 51,800. That gives us 1,049,840. So everything is correct here. We still good?
Okay. Yes.
Sorry for taking your 10 minutes. I had to take your 10 minutes because we started 10 minutes late, okay? I'm sorry. I was struggling with
No,
you.
it's okay.
So I only owe you 30 minutes, all right?
Yes.
Can I just take 5 minutes? Or you want to rest?
Yeah. No, you can take 5 minutes.
Now, with your 5 minutes, the reason why you were asking me what happened with that number of units produced and number of units sold, I'm going to go to that information quickly. Actually, I'll just take a minute of your time. Units produced is 3,280 and units sold is 4,000. All I'm going to do is just to, the question was for me to calculate unit of cost of production of each pull filter. So you will simply take, when you calculate the cost price or cost of production per unit, it's always number of units. It's actually the cost price, which is your total production cost divided by the number of units produced. Did you get that?
Can you please repeat?
Cost of units produced is the cost of production, total cost of production divided by the number of units produced. Total cost of production comes from your production cost statement. Look at your production cost statement. Cost of production of finished goods is 900 and it's 793,600. For you to get cost of production per unit, you will take that 793,600, you divide it by the number of units produced, which was 3,280, and that will give you a unit cost of production. Hence, your unit cost of production will be 241,095. Did you get that?
Okay.
And
Yes.
then they said to you, we need to calculate selling price of each filter. Where did they get that 1.5 million? Okay. Where did they get that 1.5 million?
Is it from the sales amount?
Exactly.
The
They
one.
give you the sales amount, and the sales amount is 1.5 million. So you will simply take that 1.5 million and divide it by the number of units that were sold, and it will give you selling price per unit. Do you understand that? For how much did you sell each filter? So for us to get that value, we'll take your total selling price and divide it by the number of filters that were sold, and that will give you 373. Do you know how to get the markup though?
You mean without them telling us?
The markup, yes. The markup
No.
is simply your gross profit. Your gross
It's
profit,
oh.
your gross profit is simply your selling price per unit, which is 375. You minus your cost per unit, your total cost of production per unit, which is 241.95. And then it will give you a gross profit of 133.05. You divide that by cost of production, and that's how you get your markup pay, your total markup percentage. And in this case, it's 55%. Are we good?
Okay. Yes.
So please enjoy the rest of your Sunday.
You too.
I will see you next week, Saturday. All right.
Yes.
Okay. Cheers for now.
Thank you. Enjoy your day as well.
Thank you so much. Bye-bye.
Bye.